Welcome to this video. In this video I'm going to be doing a stock analysis of Navitas semiconductors. Now as you can see recently it has absolutely exploded upwards. As you can see back here in April of this year we're trading just below $2 and now we're trading at almost $13, which is absolutely crazy. Now something you should know is, as you can see, the market cap of this is very small, so you should always be very careful in smaller companies like this, because this means that it's easier for it to move upwards or downwards. Now something interesting as well is the volume currently is absolutely insane. The average volume, as you can see right down here, is 38.7 million, and recently, as you can see, is but 98 million, which is absolutely crazy. I'll see before this huge ride upwards, the volume in this stock is very low. So of course, be very careful. Now, the reason for this huge volume blow up is because they made a partnership with Nvidia. As you can see, that was announced in May, that they were going to support artificial intelligence infrastructure designed by Nvidia. That is going to be absolutely amazing. And now, of course, why is this going to be amazing? Because that's the same thing Taiwan Semiconductors do. So if they can get into that market, it's going to be amazing. And they are a pure play semiconductor company, which is something that I especially love. Now the beta in this company is quite low at 0.33%, meaning it's actually less volatile than the average index. Now something you should notice, this isn't even the all-time high for the stock. As you can see, that was back in November of 2021, just above $22. And as you can see also, it is quite a new company. It was first launched back in January of 2021, so it's quite a new company on the stock exchange. Now, if you go down and look at the earnings, as you can see, they're still negative, but overall, as you can see, they are increasing them more and more, and hopefully we can see some positive earnings soon. As you can see as well, they don't pay out any dividends, of course, because they don't make any actual money. As you can see in the revenue, how do they make their money? That is integrated circuits and related components. This is just semiconductors. As you can see, there are in quite a lot of Asian countries, Hong Kong, China, and just Asia, South Korea, Taiwan. So overall, as you can see, there are quite many places in Asia compared to, let's say, United States or something like that. Now, there are a bit challenged by tariffs, and that is going to be seen in the next earnings. But overall, I do like this company quite a lot, also because they have very little debt, as you can see right here. Their cash is 161 million, which is quite nice compared to how much debt they have and compared to their market cap. Now, something that is also nice is their PS is actually relatively low compared to historically. We have seen it quite a lot higher back in 2021, up at 84, and currently we're sitting at 29. I mean, earlier we have also seen lower. I mean, just look at last year, it was at 7.8. Of course, we are quite a lot higher than that point, but I do still think it is quite a cheap company. Now, they also have quite a lot of closely held shares. This is something I don't like, however, because this is going to be maybe a CEO or some other investors who have a lockup on shares they can't sell. So when these are being sold, of course, they could flood the market and the stock price could plummet. Now, something I also like is they don't have that many employees. Something we often see in smaller companies is they have way too many employees. Of course, then they sometimes outsource, but that is just actually more expensive than hiring them in-house, especially in companies that are situated in Asia. Now, if you go down and look at the performance, as you can see here in the seasonally, as you can see, it is quite a decent company. It's only years ago great. I mean, look at this: 2021 up by 53%, 2023 up by 123%, 2025 up by 264%. Now, last year and 2022 were quite poor years on the stock, but in smaller companies like this, you really need to expect that this can happen, because of course this isn't a huge company like JP Morgan, which can easily just sit at a 5-6% increase each year. This is one year where you might see a 200% increase or a minus 80%. So of course, always be very careful when you invest in small companies like Navitas. Now, if we look down and look at the technicals, as you can see down here, for the day it's a strong buy, and for the month it is still a strong buy. That is simply because it has risen so nicely ever since the early days of September. And as you can see here, we even have a golden cross back here in the middle of September. Now, something you should notice also in the RSI, we are quite high at the moment, and that is the relative strength index. This means how many sellers versus buyers are there in the market. And when we're up here between 70 and 50, we're in the upper bracket, meaning we're in a bull market. And this is quite nice, but you should also be careful when we're up here in overbought territory. This means there is a lot more buyers than sellers in the market. Now, when we're down here, as you can see, between 50 and 30, we're in a seller's market, as you can see, and we're trading downwards. And sometimes we even go into oversold again, like down here. And of course, you should also be a lot more careful when down here. So a thumb rule is, when you see the spikes like this, also be a lot more careful, because of course today we're up by what, 28%, but tomorrow we could be down by 7, 8, 10%, because of course maybe some people bought down here is like nice, huge profit, let me just take the top off, or even people who bought down here. So always be very careful when you see a RSI is up here, because it can be an indicator of this company is too hot at the moment. And the same is true with the volume down here. As you can see, the stock price back here in May rose rapidly, and as you can see then, as the volume anticipated, as you can see, the stock price fell. So that is also something that could happen here. If the volume does increase, or at least stays the same, chances are we might see the stock price fall if people are thinking, well, now it moves too slowly, and the stock price is then going to go downwards. Now, if you look at the analyst rating on this, as you can see, it's actually quite a poor analyst rating. We have neutral, we have 1 strong sell, 5 hold, 1 buy, and 2 strong buy, and the average price is actually down by 47%. Now, I think that's quite interesting. I do think in a year's time, I do think it's going to be worth more. I think in a year's time, it's going to be worth 14 or 15 bucks. But of course, this is very hard at the moment. But overall, I do think a lot of analysts need to reiterate their analysis, because I would say 14.3 is where it should be at in a year's time. The annual EPS estimates, as you can see, they're negative for this year, next year, and the year after that, and 2028 we're estimating to actually make profitable EPS. And the earnings as well, they're estimating this year is a bit worse than last year, but overall they're estimating to increase slowly but surely, and then in 2028 they're estimating to make a proper amount of money, and that is going to be amazing. And in a sector like semiconductors, I do believe it in the long run. That is simply because we need semiconductors in every single piece of electronics there is on the planet, and we are just going to need to use them all the time. So of course it is a company that has come here to stay, unless they're going to get beaten out by companies like Taiwan Semiconductors. And that was my analysis on Navitas Semiconductor. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the company Schwimms Analyze in the comment section below.